Hello, this is Corner Invest. So ASML is down around 6% after reporting its earnings. So over here, ASML in the European market is down around 6% today. And at one point, it was down around 7% from basically the closing yesterday. So ASML is down 6% because they missed a slight portion of their earnings as order disappoints as well as the tariff uncertainty still holds. So over here, you can see your net sales, they were 7.74 billion as compared to 7.8 billion euros that was expected. And then the net profit was 2.36 billion as compared to 2.3 billion that was expected. So they beat the net profit, but then they missed on the revenue, and they also missed on another very key indicator that ASML has as well, which is your net bookings number. So net bookings number came in at 3.94 billion as compared to 4.89 billion that was forecasted over here. So for ASML over here, the problem with the net bookings number is it is very cyclical, it is very random. So one order from like a big client can hurt the net bookings number, and that is why they're planning to remove it from 2025 onwards at the end of the year. And in Q3 of last year, they actually missed their net bookings by quite a fair bit, and that caused the stock to drop around 20 to 30% in just I think a span of a few days or so. So yeah, I think it's a good move from the management to remove this net bookings number because from quarter to quarter the fluctuations are extremely high, and it's better for them to look from a yearly perspective rather than from a quarter to quarter perspective. Of course, the streets will just focus on this net bookings number for this quarter and they will sell off the stock, although the fundamentals are still intact. So let's look at ASML's earnings over here in terms of its fundamentals. So this is the Q1 of this year. So 7.7 billion of revenue, 5.7 billion net system sales, 2.0 billion of install base management. So install base management is their reparation where they have people on site to manage all the different machines. So it's 100% retention rate and it's an incredibly high quality business. And more than 95% of the machines that were made by ASML over the past 30 years is still functional today. And so this install base management is just incremental revenue over the next 20, 30 years or so, as ASML continually sells all your different machines. So ASML over here, gross margin 54%, operating margin 35.4%, net income margin around 30.4%, and earnings per share up to around $6. So they had an earnings per share last year of around 3.94. Now it's at around 6. So that's just incredible in terms of its fundamentals. So as for the outlook for this year, in Q2 they're expecting around 7.2 billion to 7.7 billion of revenue. And yeah, the gross margin is around a 50 to 53%. So I've looked at what they said. They're saying that they're trying to increase the bandwidth of their gross margin so that they can account for all this tariff uncertainty. So the tariff uncertainty is affecting ASML as well. I'm sure it's affecting every single semiconductor company in the industry. So Nvidia yesterday, they were hit with export restrictions on their H20 chips as well, and that will cause a ripple effect for all the different semiconductor industry in the entire chain. So for full year of 2025, they are reaffirming their guidance around a 30 to 35 billion of net sales, of which it is a 51 to 53% in terms of its gross margin. So overall, the guidance is still intact, although they have all these different tariffs uncertainty, which is the positive for this report over here. So for ASML over here, if you're to just look at the quarterly metrics over time, so let's look at the quarterly metrics over here. So as you can see, the gross profit margin has been increasing over time. As compared to last year, it is now 3 points higher. Net income margin is also substantially higher as well, around 7 points higher as well. And then you have net bookings that is a lot higher as well. And then yeah, overall, I think this report was good, but of course the streets will expect a lot more from a company that is trading at around a 28 times earnings. So for ASML over here, after today's drop at pre-market, this company is trading at around a 26 times earnings. So if you were to just look at the history of ASML, the only point where it traded below a 26 times earnings was in 2018 when we had the tariff war as well. And over these past few years or so, there's never been a point where ASML traded below a 26 times earnings. So I think ASML today is presenting a very, very good opportunity if you're trying to enter into the stock. Arguably, the stock is cheaper now as compared to a few days ago because the valuation for this stock is much better right now. So let's take a look at what management said about this earnings report over here. So this is what they said about the tariff. So yeah, let's take a look at it.
When it comes to the install base, our install base is growing. We see a stronger mix of EUV versus DUV, and this is also leading to some growth in the install base in 2025.
And then how do you see the dynamics around tariffs playing a role in the markets?
Well, I think the whole dynamic is still very new. And I think the one thing I like to say, which is being shared by many experts, many businesses, is that this dynamic is creating a new uncertainty, especially when it comes to GDP, so micro level. And indirectly, of course, our potential market demand. So this is a dynamic I think we have to watch very carefully. Now, this being said, where we are today, we still see basically our revenue range for 2025 being between basically 30 and 35 billion euro.
Yep. So ASML over here, they basically cited the tariff as sort of like an uncertainty hanging around the markets. And the management also said that the tariff has a few impacts on ASML. So ASML machines that are being shipped over to your US countries, there'll be one portion of ASML's revenue that is impacted. Materials that are being imported into all your different fabs from other countries into the United States as well, into the US fabs, that is another portion of ASML's business that could be affected as well as just importing of ASML and US materials over here. Last portion, let's take a look at ASML's base case, bear case, and bull case. So over here, ASML's valuation for 2025, which is this year, based on their numbers, the stock has a base case intrinsic value of around $753, a bear case of around $557, which we saw a few days ago. And then, the bull case will be around $1,000. So I do believe that they can hit minimally the base case, which will give the stock price of around $753. That is around a 10% discount at today's price over here, a 15% discount in pre-market. So if you were to look at a 2030 guidance, which they gave out last year as well as last year, they are projecting between a 44 to 60 billion in terms of net sales in 2030. So using all the different metrics that they gave, in terms of all these different margins and the guidance that they gave over here, the stock has an intrinsic value, base case intrinsic value right now of around $770 discounted to the price today. So let's take a look at ASML's valuation based on an EPS calculation over here. So ASML, after this latest quarter, they have an EPS of around 24.52. And assuming a 14% growth rate for this company over the next few years, analysts are projecting around 20 to 25%. I'm being conservative, I'm putting it at around 14%. And assuming a 30 times earning for this company, which is the base case, and for a quality business like ASML, I do believe that it deserves this valuation. Assuming a $650 stock price, which is what it's trading at today, and assuming it holds its dividend of around 0.5, this company will give you around a 17% CAGR over the next few years. So this shows that ASML is a company that is undervalued. This 30 times earnings may be a bit too bullish. Let's say it's at 26 times. It still yields you around 14% CAGR over the next few years. So for ASML today, I think the price is decent. So if you're looking to start a position today, especially after this earnings dip, and it could be a consideration for you to make. Please invest safe.